Hello and welcome to Stock Market Fever. Today is Tuesday, May 16th, and Walmart was smacked down due to disappointing earnings. But the Dow soared upward over 400 points in response to what should have been considered bad news by the Fed. Fed Chairman Jerome Powell reaffirmed his commitment to bringing inflation down, stating on Tuesday that he will support interest rate hikes until prices return to a healthy level. In his most hawkish speech to date, Federal Reserve Chairman Jerome Powell said the U.S. Central Bank would keep raising interest rates until there is clear and persuasive evidence that inflation is declining. In a live-streamed interview with the Wall Street Journal, the central bank chief said, "If it means extending beyond commonly perceived levels of neutral, we won't hesitate to do so. We'll keep going until we feel we've arrived at a point where we can say financial conditions are suitable and inflation is decreasing."
We know that this is a time for us to be tightly focused on the path ahead and on getting inflation back down to 2%. We know how people are suffering from high inflation, and we have both the tools and the resolve to get inflation back down. And no one should doubt our resolve in doing that.
Investors drew heart from reassurances from Powell that the central bank was committed to utilizing its policies to drive down inflation, which was still at multi-decade highs, and stock futures in the United States opened higher Tuesday afternoon. Earlier today, Walmart shares were hammered when it reported earnings per share down about 23% for the current fiscal quarter. Walmart attributed the decline in earnings to a combination of elevated supply chain costs and product mix and increased wage costs in the U.S. In other words, Walmart, as much of a powerhouse and dominant brand as it is not immune to the powerful forces of inflation, and until the Fed gets inflation under control, we can see Walmart's performance continue to suffer. Walmart closed down over $16 per share to close at $131.35 for a loss of 11% in today's session. But Walmart's performance was at odds with the overall market as the Dow closed up 431 points for just under a 1.5% gain in the session, and particularly tech-heavy NASDAQ closed up 321 points for a gain of about 2.75%. So, does this make any sense to you? The overall market has been crashing this year, at times savagely so, due to rising interest rates and inflation worries. And Walmart, whose earnings fell victim to inflation, was smacked down after earnings came in lower. Yet, Fed Chairman Jerome Powell speaks and indicates he will keep raising interest rates, which will lower people's purchasing power, and the market soars way higher. Folks, to me it seems like this exuberance of the market today is premature and has all the earmarks of a dead cat bounce. Yes, the Fed will continue to ratchet up interest rates to fight inflation and eventually may have some success in taming it back down. But that will not happen overnight. And consumers, meanwhile, are faced with decreased buying power as a result of higher inflationary costs and higher borrowing costs. So, while the Fed's strategy may be right in the long run, in the next few months consumers will be under a lot of buying pressure, and costs for companies will still be running high due to labor, fuel, supplies, you name it. Therefore, while we do not offer advice, we do believe that in the next few months the market could continue its roller coaster behavior, running up hundreds of points in a single session like today and then followed by big takedowns as disappointing earnings come in. Yes, we continue to be long-term bullish on Walmart, but in the short run we are neutral, and for the overall market we believe that today's run-up could be the beginning of a short-lived dead cat bounce. We continue to believe that oil stocks are the safest bet for capital preservation and perhaps continued growth. But what do you think? Which way do you think the market is headed in the short run and over the course of a year or longer? Please leave your thoughts and comments below, as we'd love to hear from you. And be sure to like and subscribe for future actionable stock market news and alerts right here at Stock Market Fever.